Hello, hello. This is not financial advice. This is just for entertainment purposes only. I woke up this morning to this nightmare of a message. Someone that annoys me. I'm just totally kidding, Nadia. Um, Asked me about investing, and that was her big mistake because I don't know anything about investing. We talked for a bit, and I tried to explain to her that, most people just invest in mutual funds, ETFs, right? It takes a lot of time to be picking individual stocks and you need an edge, right? You need some sort of an edge. I was trying to explain it an advantage because you're up against algorithms, hedge funds, professionals. People do this full time. And so I really encouraged her to start with ETFs, unless she has some sort of an edge, something where she knows about a specific company and that she has that information legally, hopefully. Because even professionals cannot beat indexes. There's a famous story about Warren Buffett, how he made a bet with a portfolio manager, and that portfolio manager lost about his ability to beat, I forgot which index, probably the SPY. And so if these professionals cannot outperform an index, what are the chances of a normal individual? Granted, I mean, if you pick, one perfect stock, right? Yeah, you can make a buttload of money. But if you're wrong, you could be like all those people who are still holding on to their AMC and GME stocks, et cetera. And I think for a person who works hard for her money, she does. She's a hardworking person. I think I think maybe you don't want to take a lot of risk in the beginning with money that you worked hard for, because for most people, right, the pain of losing a dollar, absolute terms hurts more than earning a dollar, getting a dollar. And even Warren Buffett talks about how preserving capital is important. So I kind of think that, ideally you just start with mutual funds that give some broad exposure. Now, just because you go and invest in an ETF doesn't mean, or a mutual fund, it doesn't mean that you're going to always do well. I mean, there are unexpected events such as this, right? This is, the market peaked up around, where were we here? Almost six, I don't know exactly, 610. And last couple of days, this past week, we've had a beating. We've lost over, close to 17% or something like that. I don't know the exact number. We're close to bear market territory. There are no guarantees, but if you look over the course of time, from this is SPY, which is an index that only came out back in 93 or so. Eventually, over time, you people have created wealth. And the most important thing about investing is time in the market and compounding, letting your money build on itself and being consistent, which means that you buy when things are not well, if you buy when things are bad, you buy when things are good. You just keep buying a steady amount if you can afford to, right? You would have bought here, you would have been buying here every month. You buy something, you buy the same amount, and you just write it, and hopefully it will continue to grow. Now, I don't want to make this video too long, Nadia, but just keep remember, at the end of the day, it's just a game. It's a terrible thing to say. I'm not trying to scare anybody, but these stocks, yes, they're based on, analysis, discounted cash flows, whatever projections, market share, whatever you want to, whatever approach you want to take to analyze these things. But at the end of the day, the value of your stock or your investments is based upon another person's willingness to buy your stock or your ETF or whatever it is. And if people lose faith in the value of the stock that you have, then you lose money. I mean, look at today. Now, this is an index, Nadia, which means that there's 500 of the biggest companies in America are in this ETF, and I'll explain ETFs in a second. But look, all right, at this point, people stopped believing that these companies were in good position, and they just sold out. They're like, no, no, I want to get out. And if you are still holding, you lost a lot of money on paper, at least. Some people argue about tax things, like capital gains taxes, whatever. So I'm not going to spin off into this tangent about it. But so you have to understand that. But over time, it's done well for the most part if you've been patient. Question becomes is, are we in a new paradigm? Are we in a new world now where um, maybe stocks aren't going to be valued quite the same way? People are going to be living in fear. Some people say we're going to stagflation, etc. I'll be honest. I bought some stocks recently. I bought some on Friday at this dip. So I'm buying. I'm not didn't buy. I didn't buy a ton, but I bought. Um, but who knows? It could get worse. No one can tell you what the future holds. That's the issue with investing. Um, are there some other types of investments that you can control better? Yeah. If you do real estate and you're in a good market where there's always demand for real estate, you could become a landlord or something, I imagine. I don't know. I've never done real estate. But for most people, stock investing is the least amount of time involved to at least prepare for their future, their retirement, right? Because other types of investments, either much more risky or take a lot more time. Now, if you want to start buying individual stocks, that will take more time because you have to really understand the stock that you're trying to invest in. If you buy a mutual fund, such as SPY, you're kind of just betting on the strength of the US economy, which, did poorly these last couple of weeks. But you're saying America is going to do well, therefore SPY will do well. It's that kind of a bet. Um, you know, so that's about it. I hold on. So, Nadia, here's something called an ETF. It's an exchange traded fund. I think that's what the E stands for. And it holds many different stocks. Okay. And in this case, this one represents the index that I was showing you earlier. So it holds the same companies that are in this index, which everybody uses sort of as a benchmark. Lots of people measure their performance against the S&P 500, the SPY. Lots of people yeah, it's just a benchmark. It's what people use. And so you'll see inside here, this is all the stock that it's holding. And what people like about something like this is that it helps them to not have to choose individual stocks because they can make a mistake. Once again, something like SPY, you're just betting that, the overall economy of America will do well. A lot of these companies obviously have international sales. I mean, but for the most part, these are US based driven type companies. And another thing to consider sometimes is that these types of index funds, especially Vanguard, have very low expenses. They don't charge you a lot of money to manage this for you. If you go and you choose a professionally managed fund, one of these other funds, they charge you fees to manage your money. And if they lose money, they still charge you money to lose your money. Whereas this is it just tries to copy the index. So there shouldn't be a lot of expense involved. And over time, that money that you save from the expenses can also turn into more wealth for you. So Nadia, this is my Roth IRA. It's my individual retirement account. I think that stands for. I don't know all the words. I started it about a year ago, my all time. Um, and I put in some money back in January, and I started investing in January. Okay. And for me, I buy every Wednesday. Every Wednesday, I invest $25. Yeah, I kid you not. $25 every Wednesday. And every Wednesday, I buy these three funds. These are the three funds that were recommended in this article. Hold on. This is something that you should read if you get more serious about it. It's just a boglehead. It's on Wikipedia. It's called the Three Fund Portfolio. And here are the advantages, and you can read about it in a bit. But it's got a little bond. It's got some international exposure, and it has exposure in the S&P 500. It's a very simple fund, and lots of people in America, lots of people who have built their wealth have built it through something similar to this. All right, you don't necessarily need thousands and thousands of different portfolios or thousands and thousands of different stocks. Those stocks that I own are similar to this, but it's just a limitation of Robinhood. I couldn't buy these. And so here it is, right? I just every Wednesday. And you don't have to do every Wednesday. You can do once a month. I just kept buying. I buy every Wednesday, $25. You can see these really weird share numbers because I just buy a little bit of each every Wednesday, good or bad, right? I bought much less when it was up here, I bought more when it was down here. All right, I just kept buying. I'm gonna buy my $25 this Wednesday if the market stays where it's at will allow me to buy more shares or more portions of shares of these three funds than I could when I was up here. And that's what happens. Like you just steadily buy. Most Americans aren't really saving very well for their retirement. So most Americans don't really invest. They don't have the money. They live paycheck to paycheck, right? But for those that do, most of them invest in stocks and they invest in mutual funds. So anyway, I'm just showing you this. Yes, my whopping $1,500 account here. I've invested so far about $1,600 and I'm now down. But I was up. At this point, my portfolio was up 12%. I was up 12%. Now I'm down 2% overall. You see that all the time. And that's just part of it. So anyway, maybe this video is a bit long, but I wanted to give you an overview about, you know, the risks and things like that. But the question is what else would you invest in to make money? You could do crypto, but crypto has a lot of dangers and there's a lot more scammers in crypto. And, and it's also can be very, it could be stolen among other things. I've heard about that too. So anyway, I'll stop here, but if you want to know more, just text or something and I'll make you another video. Have a good one.